As always, we'll start with a look at global energy commodities. Lots driving the oil market this week. First, positive economic data out of the US with slowing inflation. China is talking about a stimulus program as well. So Brent has responded. Brent above $80 a barrel to end the week. Yesterday evening at $82.44. WTI not so bullish there, but still relatively robust coming out of the January trading season. Natural gas a bit muted, and so is RBOB gasoline. Let's take a look at global equities markets around the world. As always, we start with the NGX. Nigeria's all-share index is on a roll. Look at that, ending the week up 25 basis points. The bulls had it at 102,401.88 points on the all-share index. Of course, market capitalization well above the 50 trillion naira mark. And of course, we heard the news about Dangote Cement over the past week, reaching and hitting the 10 trillion market capitalization mark. I'll be talking about that a bit later on this segment. Value of deals 8.85 billion naira. Let's take a look at European equities. Well, all the major indices in Europe up, but look at what is happening in CAC 40 Paris, up by over 200 basis points to end Friday evening trading at 2.36% up on the market. FTSE All-Share Index in London also ended on a bull run at the end of the week. Now, for CAC Paris 40, a lot of the luxury brands and retail luxury goods companies were the ones driving that bullish end to the week. But good news there as well, because the ECB under Christine Lagarde held rates steady at 4.5%. After the last policy meeting, may signal rate cuts later in the summer. Markets obviously responding positively and trying to make sense of that move. Let's take a look at the North American market with US equities. Well, Wall Street, a relatively good end to the week, notwithstanding what is happening in the tech world with all these layoffs. NASDAQ Composite Index ended trading yesterday evening around 5 p.m. GMT at 0.1% up. Also, the Dow Jones Industrial was up 33 basis points. Now to my top picks for the past week. Let's take a look at the top picks. Well, the first story on my top picks here is the fact that Tunisia's government is going to allow a bill that would let the central bank finance the treasury. So the central bank essentially is going to be funding Tunisia's budget deficit by buying state bonds. Does that ring a bell? Interesting moves there to try and plug the financial challenges that country is going through. And interestingly, that is meaning that the president, Said, and the central bank governor in Tunisia, Abbasi, are at loggerheads because Abbasi essentially says this is illegal, it's going to fall inflation a la Venezuela-style levels of inflation, which are well over the 40% mark. But the president is insistent that this transaction will happen, and it's looking at a budget deficit of well over $5 billion. Around $3.2 billion of that is going to be financed through this loan from the Central Bank of Tunisia. Interesting times there. Tunisia, of course, rejected an IMF deal, which the central bank governor in that country, Abbasi, was supporting. Meanwhile, the central bank governor, who's been in power now for 6 years, well, in his seat for 6 years, not in power, may not get a second term because of this clash with the president of Tunisia. Next up, Chinese stock market rout. Almost $6 trillion in value wiped off Chinese shares in China Mainland Stock Exchange and Hong Kong Seng Index. The government in China, People's Republic of China, is looking to plug and boost the market with a $278 billion injection. How are investors responding? Not so great. Concerns around the property market, concerns around the post-COVID recovery. So we're seeing at least a 6% depression in stocks throughout this week. Now, this depression and downturn in market valuation in China has been happening since 2021. So this is essentially the climax of that downturn in the Chinese market. And there's been huge sell-offs in the past week, around $6 trillion. How will China recover from that? Will the plan by the government to plug the troubles there actually yield fruit? Interestingly, the People's Reserve Bank of China is reducing the cash reserve requirement of Chinese banks in a bid to try and boost the economy and encourage more lending. But time will tell whether this move to prop up the Chinese stock market will yield any fruit. The World Bank has approved $300 million in a facility for Ghana. Ghana is facing one of its worst debt crises in almost a generation. Last week, it took on about $600 million worth of financing, also from the IMF. It's part of a program that will see Ghana also draw down on an additional $900 million worth of support from the World Bank in the coming months. So good news there, good way to end the week for Ghana. Dangote Cement, of course, as I was talking earlier, becomes the first Nigerian company to reach the 10 trillion naira market capitalization ahead of Airtel Africa. Well, this all started when billionaire businessman Femi Otedola took position for an undisclosed amount of shares in Dangote this January, helping to prop up the shares of Dangote Cement, 10 trillion naira market capitalization. Quite a major boost there for Dangote Cement. And then finally, in the US, President Joe Biden is halting temporarily, at least for now, issuance of new licenses for LNG export terminals. Now, America last year became the world's largest LNG exporter ahead of Qatar and Australia. It's producing around 87 million tons of LNG annually. It has another 63 million tons of LNG due to come on the market. That's not part of this current halt to license issuances, but the climate activism lobbyists have said LNG gas is also a source of carbon dioxide, and of course, when burnt, methane emissions also released into the atmosphere can impact the climate. And so the climate lobbying the US is saying we want to halt to this until we further look at the implications for the environment and sustainability. Of course, Joe Biden is entering an election year. He wants to attract the support of the young, climate upwardly mobile constituency. Interesting times there in the US for LNG exports. That's it for Business Top Picks. And now for some other top stories from around the world. First, in Nigeria, Governor of Nigeria's central bank, Yemi Cardoso, has stated that Nigeria's currency, the naira, is undervalued, promising that in 2024, the bank would work towards real price discovery in the FX market. Cardoso stated this while delivering the keynote address at the Nigeria Economic Summit Group Outlook for 2024. According to the governor, the bank will execute inflation-taming policies through monetary policy instruments and collaboration with the fiscal side of the economy. In the same address, the governor stated that inflationary pressures are expected to decline in 2024 due to the CBN's inflation targeting policy, which aims to rein in inflation to 21.4%. Still on Nigeria, the Nigerian National Petroleum Company Limited, NNPCL, increased its revenue profile by 37.2%. from 6.42 trillion naira in 2021 to 8.81 trillion in 2022. Its latest audited financial statement released yesterday, Friday, revealed. The document, the fourth in the series to be made public since 1977, when the then NNPC began operations, also showed that the company recorded profit after tax of 2.5 trillion naira, representing about 274% increase when compared to the 674 billion it recorded in 2021. In all, the statements for the year ended December 2022 showed that during the period under the review, the NNPC had total non-current assets of 37 trillion naira and current assets of 21.5 trillion naira, to give a total of 58.65 trillion in assets on its balance sheet. Well, elsewhere around the world, Sony Group has confirmed it is pulling out of a $10 billion merger agreed in 2021 of its Indian operations with local rival Z Entertainment. Of course, audiences in Nigeria will know about Z TV. The collapse is a blow to both firms' hopes of better competing with streaming rivals such as Disney, Amazon, and Netflix in the booming entertainment market of 1.4 billion people. Now, the merger was agreed in 2021 with Z Chief Executive Puneet Goenka saying the new outfit would be worth close to $10 billion with annual revenues approaching $2 billion. But closing the deal has been problematic, most recently because Sony reportedly did not want Goenka, the CEO, who's facing a regulatory probe, to run the combined entity. Online streaming giant Netflix subscription numbers rocketed more than 13 million in the final 3 months of last year, the company said. Despite price hikes at the leading streaming service, Netflix finished 2023 with slightly more than 260 million subscribers around the world, with a profit of $938 million in the final quarter versus just $55 million in the same period a year earlier. The US company said in an earnings letter it believes there is plenty of room for growth ahead as streaming expands. Still in the tech world, Microsoft is letting go of 1,900 workers from Activision Blizzard and Xbox. Activision Blizzard employees are the main target of Microsoft's layoffs, but certain employees of Xbox and ZeniMax will also be affected. The reductions amount to almost 8% of the whole workforce of the Microsoft gaming company, which employs about 22,000 people. In an email to staff that was shared with Windows Central via an unknown source, Microsoft Gaming CEO Phil Spencer indicated that 1,900 jobs out of an existing 22,000 were being slashed in order to build a sustainable cost structure. OpenAI chief executive Sam Altman, who has been working to raise billions of dollars from global investors for a chip venture, aims to use the funds to set up a network of factories to manufacture semiconductors, according to people familiar with the plant. Altman has had conversations with several large potential investors in the hopes of raising the vast sums needed for chip fabrication plants, or fabs as they're known colloquially, said the people, who requested anonymity because the conversations are private.